You are looking live at the Nasdaq. It's after hours, so it's not doing anything, and it hasn't been doing much for a long time. You can see today it was down 32 points or 0.23% and closed at 13,678. The volume was 8% below the its average daily volume, 50-day average daily volume. And we can see that this red line, which is your 50, which is your longer term moving average, is trading kind of sideways, while the shorter term moving averages, the 10 and the 21 exponential, are starting to curl lower. So the shorts would love to see that. Also, the it's now trading 1.5% below this 50 and 0.7% below the 10 and 0.8% below the 21. So those are identical, and it's all trading within 1%, which is generally pretty bullish. But I got to tell you, the bears have got to be thrilled here with their head and shoulders theory here, as we got the shoulder, the head, and now we're starting to get the Gumby here. And this is what the shorts want, this Gumby shoulder below moving averages. They're probably getting really excited right now. But on the bull side, the bulls are still looking at this cup with handle pattern, and it's just handling out nicely here. So something's going to give pretty soon. Like I said, this morning I wrote, it's like being in a car ride with your children, a long car trip, and they're always asking, are we there yet? Are we there yet? And the adults know that we're going to be there soon, but for a kid, it's just aggravating and frustrating that you're still driving forever and ever, it seems. So we don't want to be kids here. We want to be the adults and just bide our time and just allow this market to play out. Tomorrow we have the Fed announcement, and so it's going to move around quite a bit, and maybe we can get a little relief rally. There's always a lot of caution ahead of these Fed announcements, so I believe we could get a little bit of a relief rally tomorrow. Anyway, that's my story, and I'm sticking to it. We'll see what happens, one day at a time, folks. I just want to go over the good, bad, and the ugly real quick again. In the there is a divergence in the Magnificent Seven or the Great Eight or whatever, or the Divine Nine, but Google is certainly showing strength, and it's one of the stronger, if not the strongest, stock of those Magnificent Seven. And the other one is Amazon. I'm going to show this later, but it pulled back to its 50 today. But they announced that they're going to hire 250,000 people because they're expecting a strong Christmas. You think that would be bullish, right? But no, it's costly to hire people and train them. So it went down a little bit today. It still looks fine. Apple is part of the bad. Apple and Microsoft, it's looking better the last couple of sessions, but it's still below its moving averages, and the moving averages are trending lower. So not something I'm interested in. And Microsoft, same thing, trading below its 50 there, so that's kind of looking kind of bad. And then the ugly is Netflix, which is just when they slice their 50 like that, and they take weeks and weeks to trade up to the moving average, they usually become good shorts. But anyway, that's another subject for another time. I'm going to just go through a little different today. I'm just going to go through some leading stocks, because when you observe the markets, they're like this, you just want to look for some strength. And how are the leaders performing? That kind of gives me a better gauge than just looking at the Nasdaq. So I'm going to go through, quite a few stocks today, and I'm going to start with ELF, because ELF has been selling off, and it looks to me like it's trading right now below the trend line here, this upper channel line. And it broke below that. So to me, that's a bad sign. And you can go back further and even further in the year, even to last year. Okay. And then if you're, into stages, you can say this is like your IPO, right? Cup with handle, then the breakout, stage 2, right? And now stage 3 would indicate little something like this, we're just trade sideways before heading lower. And then on the weekly, we can see this. The last time it made a base was here in last summer. Okay, I do want to go to, and this you can see the channel line break today with or this week with this stock. So not looking good. I do want to go back to the daily, and I'm just going to go back 1 year with ELF, because I just wanted to show that This is a nice long base, and you can see all of the selling in this base and then this base. You can see the big volume bars, right? Big pink volume bars. A lot of sellers and non-believers in this stock. And finally, it starts to build the right side of this base here. Big move, gap up on volume, and then makes this little handle here. See this little handle, the pull back to the moving average. And then it starts, really getting some big buyers here. And then it, eventually turned into what we know it is today. Is just a monster from what, 30 to 130. So a nice move, but I sold half mine this morning, because it sliced its 50 yesterday. I want to give it a chance this morning, but it was just obviously weak. I bought it in the 50s, so I'm playing with house money, but it's never house money, it's always our money, right? And I don't like to lose money, but hogs get slaughtered, so I think it's wise to take some off the table and then just let it play out. But if it forms a base like it did earlier, great. If they they're going to report on November 1st. If they don't deliver strong numbers and growth is slowing, then this run could be over for ELF, but time will tell. Stocks do sell off and form bases. It's been a real long time for the ELF, so it was about time. Going to keep my eye on the ELF because I still own a little bit. This is Celsius. Obviously a change of character here when it had this base on base pattern, broke out, and then still went sideways for a long time. And here's finally the breakout and the change of character where it moves higher. Still having trouble with the 200 number. Obviously, the tape is really weak. Not a lot of stocks doing much these days. Celsius, near 200 is definitely a strong stock and a leader. Arista Networks is another one that I wanted to look at. This is what you want to see in a pullback, right? Just kind of meek, mild selling. It's still above the 50. This one looks fine to me. But it's the general market weakness, right? I mean, the Nasdaq has been down, nearly 3% this month. So you got to expect your growth stocks to be down a little bit in that type of environment. Novo Nordisk, they split their stock tomorrow 2-for-1. It's just, gapped up on earnings and just forming this little shelf pattern. Not enough time for a base. If I go to the weekly, this is just too short of a base. And I'm going to get to this a little later on, some stock setups that I like, but they're just, a lot of them are just too soon. And they're starting to look better though. And I'm getting a little more positive. Lilly, another one that, just pulled back to its 21 today when it was up 0.2%, not a big deal. Lilly looks fine to me. Definitely one of the stronger stocks. Weatherford, this one went into the mid-cap, S&P mid-cap, 400 yesterday. Pulled back a couple percent today, but that one looks fine, as does Tidewater. This one can pull back to its 21 today, so maybe it'll bounce tomorrow. We'll see. Those are still looking, really good. Fix, which, broke out of a base, really surprised me how long this run. I thought it'd go up like 10%, then form another base, or 15%. This thing's up, more than 20% from that breakout. And now it looks like it's starting to form a base here. But you could see, this consolidation, move up, consolidation, move up, consolidation. Then all of a sudden, boom, that's a change of character. I would expect it to do, what it did in the past, but it didn't. It just kept running higher. So if you own that one, expect a little bit of a, base forming. It needs time to form a base. I think it might just pull back to its 50 and bounce, but, it's had a nice run. So you can't get greedy in this market. STRL, this is Sterling Infrastructure. He's building a heavy construction. It's a strong group, and it gapped up on earnings and just kind of formed this little shelf pattern here. It's below the 21, but still, doing fine considering the, the tape, the current market environment. And then Adobe, another one of the grade 8 or divine 9, whatever you want to call it, just finding support at the 50, and that's what you want to see, in your stronger stocks. Anyway, I talked about setups that I like, and I'm going to go straight to the big mega cap tech stocks. This is Meta Platforms. This is it's a short base. It's not a real long one, but it had this flat base back here, and that wasn't very long either. So I'm thinking that, this is what, 8 weeks now. I'm thinking this one's getting ready to take off. I hope so anyway. It looks to me like, you know, it's trading tight within the base. I like that. It hasn't had a real shakeout. You know, it's above its 50. Meta looks good to me. Amazon, the same thing. I did mention that it did have the pullback today with the news of the you know, hiring of people, but pull back to the 50, and that's what I want to see, a little bit of a pullback here with a little less volume, but I'm not big on volume. The pullback is nice, shake some people out, you know, pull back to a moving average and move higher. So Amazon looks good, but once again, this is only like 7 weeks, I believe, 5 weeks. Yeah, so that's, you know, that's not enough time really. These things need more time. Uber is another one that looks good to me. Nice pullback, cup with handle pattern. I don't know how many weeks this is, either 8 weeks, so it's getting ready to move here. 8 weeks is, you know, ample time. Uber looks good to me. CDNS, this is a software design, and that you can see the nice symmetrical cup with handle pattern. Nice, well, besides the options expiration Friday, we'll just put our little finger over that volume pattern, but this one is 8 weeks. Okay, so that's getting a little more like it. 8 weeks is better than 5 or 6. Synopsis, same category is Cadence, and this is software design, and this has a lot longer base. You can see the consolidation in that flat base pattern there. And you go to the weekly, and it's 13 weeks. So, you know, between those two, you know, Synopsis is probably a little more ideal because it's consolidated longer, but they trade in tandem. So if one goes, the other one's likely to go. Speaking of tandem trading, this is a CrowdStrike. You can see this flat base here and then a pullback to the 50, but it's still within this consolidation pattern. I mean, it hasn't gone anywhere, even from that 161.79, just, you know, just pulling back in this little channel here with light volume. Yeah, I kind of like CrowdStrike right here. Zscaler, same thing. You know, I had this 162, and then it's just been in this little channel here. These guys have both reported, you know, really strong earnings, and didn't really get rewarded for it because of the market environment. You can see this little choppy pattern, which kind of looks like the index is chop suey. Spotify, this one looks good to me. Had a high here, what, 182, then pulled back pretty deep there. That's a 29% depth in the base, but nice cup with handle shakeout in the last 4 or 5 sessions has been moving higher. This one and Duolingo both look pretty nice. I selected this one because it's got the 9-week cup with handle, and Duolingo, I think it's 13 weeks, I want to say, and it's a double bottom pattern, 14 weeks now with the double bottom, but I screwed the pooch on this one. This one, it had this, this downtrend line right here, and that was really the buy point, but I missed it. And then now it had this other buy point here at 162, and I don't want to chase stocks in this environment. Had a nice bounce yesterday and an inside day today. Looks fine, and that one, like I said, has consolidated a lot longer than some of these other ones. ACLS, this one's below its 50, you know, but it's not going to deter me from watching this one. I like the stock. It's shown the ability to really move fast. This thing's made powerful moves in the past, and now it's formed some consolidation with a pullback. So that's a good recipe for me to watch. Only 7 weeks, though. You can see it's 17% off of its high. ACLS, definitely one to watch. Another one is Builder. This one had a long run once again, and now it's consolidating. If I go to the monthly here, you can see this had, like, I want to say 13 months in a row. And then this month it's giving up the ghost, right? As it's down 10% this month. So I doubt if it's going to rally back, but it's consolidating within a base. It says 32 days there. I've got to go to the weekly. Sorry for jumping around so much. That's 7-week base, so probably needs some more time. I wouldn't count that one out either. And I'm going through a lot of different sectors, and because I don't want to just get locked into semiconductors or tech stocks. I want to look at some oil like Diamond Offshore. I want to look at the construction, and I got some other ones coming up too. This is Diamond Offshore. This one's consolidated. I don't think it's long enough here. 7 weeks, but the prior base was 16 weeks. You could see it had a 16-week base, ran up, and now it's only consolidated 7 weeks. So I think it needs a little more time here. You got to be patient. It did slice its 50 today, but I'm still going to keep watching this one. And the other one was X Pro, the oil and gas one. This one has a lot longer base and an elongated handle. Made this move on Friday, I believe options expiration now is pulled back to the 21. And this one, you talk about testing your patience. Are we there yet? No, we're not. Anyway, moving on. That's enough of the oil and gas. The next one is HURN Consulting, a commercial services consulting stock, very thinly traded, which I don't like. But I just wanted to show you the setup here. Once again, not long enough, 7 weeks. You can see prior base was 12 weeks. So they just need some time here. I'm just giving some ideas. Chipotle Mexican Grill. This one has been in a longer base. This one sliced its 50 on with volume. I believe that's an earnings gap lower now, rallied back up to its 50 and actually looks like a short until it can get back above that 50 with some conviction. But this one, the base is not long enough here. What's Chipotle? 9 weeks. Keep my eye on Chipotle, but the consumer stocks, the retail have really been hurt recently. AKAM is another one. I put it on our ready list this morning. 6 weeks, not a long enough base. Probably needs more time, but if it wants to move higher, I'm not going to argue with it. Showed some strength today in a week tape. And booking, travel, leisure services, sliced its 21 today. And this one just, flat base, just not long enough, 6 weeks. These things need a little more time. So a relief rally after PEL tomorrow would not surprise me, even though these bases seem short. Also, they could also pull back some more for a couple more weeks after, but I'm sure Powell's going to move the market tomorrow. At least I think he will. He usually does. Anyway, I'm just going to check the price action. I'm not doing much these days. And I have one more thing in honor of the great Steve Jobs. The ARM IPO undercut the 50 here. Oh, undercut the 50. It undercut its IPO low of 55.54. So today's low was 53.88. So that's typical of a IPO, but this one is really richly valued. It's got a only what 91 something in earnings. Yeah, I don't even know what the earnings are expected this year. 14, what is it, 50 cents in earnings, and it's got a price of $55. So ARM, I think this one, people got a little excited because there haven't been many IPOs lately. And so one came out, they bought it up. Instacart came out today. I'll get to that later on in the week. But anyway, that's it for me today. Thanks for watching. Tomorrow we got some FOMC interest rate news, and at MC Stock Charts, we never give up.